All right, so we know our manufacturing accounts. We know the general direction of the costs, how they're going to flow. So how do we move the cost from one account to another? Just like we've done in accounting 1A, the only thing you move things, only way to move amounts from one account to another is through journal entries. So let's look at a manufacturer's journal entries. So the process, as we said, starts here in the accumulation accounts. Let's go ahead and start with materials. So our first journal entry will be to record materials purchased. Let's assume we purchased with cash. So if we are a construction company, maybe we head down to Home Depot, we buy some materials, some wood, some nails, everything we need, and we put that into raw materials inventory because we haven't exerted any effort to change those materials. They're still completely in their raw form. So we debit it to the account. I said we purchased with cash, so credit cash. Okay. We'll do an example later where we put in amounts. Right now, I just want to give you the accounts. So this would be a debit to raw materials for journal entry number 1. I'm just going to focus on the manufacturing accounts, so I won't be doing T accounts for cash or other accounts, just the ones you see up here on this page. All right. The next journal entry that happens is for, you can guess, labor costs. Okay, so our second journal entry will be for factory payroll, factory labor, whatever our company calls it. Factory wages expense, whatever they might call it. Okay, and then if we pay it cash. So this is always going to be for the gross. Cash will always be for the net. Just in case we see an example where maybe there is some payroll taxes, right? So I just want you to know that this will be for the gross, this is the net. If we had any payroll taxes, they would go to factory payroll taxes payable for the difference. Okay, so this is to record factory labor costs. Something I do want you to notice, I have avoided using the term DM, DL, and MO because that's not the case. This materials account houses DM and IM, indirect materials. This payroll account houses direct labor and indirect labor costs. It's both. So that's why I didn't refer to it as DM, DL, and MO. It's your raw materials inventory, which houses both direct and indirect material costs. Factory payroll, which again accumulates both direct and indirect labor costs. Okay? And so therefore this journal entry is for both direct and indirect materials, in case you want to write yourself a note that it might be both. This labor costs might be for both direct and indirect labors. Okay, it's not just one. All right, moving on to our third journal entry. And again, the nice thing about this layout is it's going to always happen in this order. Materials first, payroll, and MO, unless the prompt happens to give it to you in a different order, but this just makes sense sequentially. We can't start working on, making something unless we have the raw materials, right? So it makes sense. So normally your exercises will also flow in this order. But if it doesn't, at least you'll be able to kind of find, oh, well, I'm talking about payroll costs first. Oh, that's this journal entry. Number 3, record all of your manufacturing overhead costs for the period. To record manufacturing overhead costs. So your debit is going to be MO, manufacturing overhead, which feel free to abbreviate MO. Oh, and I forgot to put this on the debit side, didn't I? So if you notice when we're doing our accumulation, it results in debits to those 3 accounts. Now the offset for MO is difficult. We might have cash, we might have to pay some of these with cash. For example, rent, right? Rent for the factory. Okay, that's going to go to Mo, and I pay my landlord to write him a check, so we call that cash. You might also have some like factory insurance that expires. When insurance expires, it goes to insurance expense, which now we're putting to Mo. Anything that has to do with plant or manufacturing is going to Mo, and we covered that in, I think, chapter 2. But the offset, right, that would be prepaid insurance, prepaid factory insurance. Okay, we talked a lot about depreciation being a cost of Mo, so the offset to depreciation, accumulated depreciation. And I know it's weird as like a little side note, before in 1A, we did our journal entry to record depreciation was depreciation expense and accumulated depreciation. Well, if this has to do with tracking depreciation costs on manufacturing equipment, we're saying we're putting it right to Mo. Okay, so replace the debit with Mo and keep the credit the same. Same thing with insurance, right? It was insurance expense in 1A, but if the insurance is related to the plant, then you are going to replace it with Mo and keep the credit. So that's what we're doing here. All right, so we did our first 3 journal entries, resulting in debits to your accumulation accounts. All right, now we'll continue on. The next one, we're going to record how many direct materials are used in the production process and how many indirect materials are used in the production process. Okay, so to record direct and indirect materials used in the manufacturing process. And how are we going to know that? It's going to be, and this is just as a note to you, it's usually based on material requisition forms. Material recs. That's how much we know. How much has been requisitioned by line workers, that would be direct. How much has been requisitioned for indirect materials, that's going to go to Mo. So you're going to have 3 accounts potentially in this journal entry. The direct materials goes to WIP. The indirect materials, as we know, belongs in Mo. And we're talking about materials, so it's going to be coming out of this asset account. So this account will be your credit. Raw materials, inventory. If no indirect materials were requisitioned, great, then we wouldn't have Mo. But right now in this chapter, you're going to see both. Okay, so if you want to write yourself a note, WIP will be for your direct materials. Mo will be for your indirect materials. Okay, and you could split this up into 2 entries, but normally we just treat it as one to make it simple because it's somewhat related. They're all coming out of the same account. They're just splitting, going if it's based on if it's direct or indirect. So let me go ahead and post that. So 4 will be a debit to WIP, a credit to raw materials, and it goes. And what I like to do too is I like to write what this is. This is direct materials. This is indirect materials. The reason I do this is because remember when we talked about, I think it was like chapter 2, we said that Mo was made up of 3 items. Mo is made up of indirect materials, indirect labor, and other. So I like to keep track of it because when I'm done, I should have those 3. If you think back, this was other. So I can go ahead and label that other. Also, we said that our manufacturing costs consisted of DM, DL, and Mo. So WIP, when I'm done, I should have all 3 of those because we can't transform something from raw to finished unless we have materials, labor, and overhead. And so I like to kind of list that off to the side, and then if I've missed something, I go, hey, I should have 3 there in WIP. I should have all 3 of these manufacturing costs there. So then I can go back and check. So that's my tip for surviving all of these journal entries. All right, similar to how we took the cost. So first we accumulate on the debit side, and then we allocate on the credit side. So we take them out of this account and move them based on the requisition amounts. We're going to now do the same thing for payroll, right? We've accumulated the costs. We don't want them to sit there. We want them to go to our jobs so that we make sure we're charging our customers enough. Remember that job cost sheet? We want to make sure that we're allocating the cost to each customer. And this is how we do it through this process. All right, so our next journal entry will be for payroll. So let's call that journal entry number 5 to record direct and indirect, and indirect labor assigned to jobs. Oops, well, okay. Direct labor is assigned to jobs and indirect labor, because indirect labor isn't yet assigned to jobs. So assigned to overhead. Okay, so we're going to take it out of factory payroll. So that will be our credit. Factory payroll. Your direct labor costs go to WIP. We said all 3 of our costs are going to be there. So direct labor will transfer here. So let's debit WIP. Again, if you want to put a reminder in, you can. Your indirect labor, we know where indirect labor goes. That's going to be our 3rd item here under Mo. Indirect labor. Okay, so we've got our credit. And if we do it right, this should be 0. Must be 0. Must be 0. All your labor costs need to be accounted for. They need to either be allocated to the jobs or to overhead. That's not the case with raw materials because that's an asset account. Payroll and Mo are what we call temporary clearing accounts, meaning we just put the money in to accumulate and then they must go somewhere else. These are temporary clearing accounts. Okay, let's see, and Mo for indirect labor. Okay, I'll pause the video here and then I'll make a part 2 because I don't want it to get too long.